My name is Lloyd Doaman, and I am the Executive Director of Carver's Community Development Corporation, which is a subsidiary of Carver Federal Savings Bank. I've been at the bank for 9 months, but I come with 20 years of experience, with half of that time working in investment management and the other half working in the community development finance space, helping small businesses with access to capital and technical assistance. Carver has been serving the community for 73 years. We have 7 branches, with 4 of them located in Brooklyn. We have 2 in Harlem, and we have 1 in Queens. We have just over 700 million in assets under management, and we are one of the largest African American and Caribbean American managed banking institutions in the United States. We also have our online banking portal as well, and we provide banking services across 9 states, from Massachusetts to Virginia, as well as Washington, D.C. And we have been headquartered in Harlem, and we are leaders in providing access to capital for minority and women-owned businesses. You can go to the next slide. And just a few highlights. We have a great public-private partnership with the MTA. We've been able to provide over 23 million in loans to MWBEs in that program, in their small business mentorship program. And we've also been able to provide over $50 million in access to capital during the pandemic, helping to preserve over 5,000 jobs. And one of the bullets that we're most proud of is that 80 cents of every dollar in deposits is reinvested back into our communities, helping to fuel small business growth, job creation, and development. Next slide. So what I would like to do is I'll talk to you about some of our loan products, and then towards the end, I'll share some tips in terms of improving your application with Carver, as well as other lenders. So we have our small business microloan program, which we just launched. And one of the interesting components to this program, which we're very excited about, is that we know that over 40 million Americans either don't have credit or have insufficient credit. And unfortunately, it could be challenging for them to get access to capital with just relying on traditional credit scoring. So this particular microloan program does not rely only on traditional credit scoring. We actually went out of our way to look at other ways to assess overall risk profile for small businesses, which could be your relationship with your vendors, with your suppliers. Are you paying your rent on time? Your banking relationships. So those are some of the aspects that we incorporated so that we can allow more of the businesses to get access to capital. And we have some basic terms. We have loans up to 50,000, terms out to 5 years. Our interest rates are affordable. Right now it's at 5%, and interest only for the first 12 months, and can be used for working capital, payroll, equipment purchase, inventory. Next slide. These are just some of the requirements. So FICO score as low as 600, 20 employees or less. We're really looking to help some of the smaller businesses that need the resources the most. Revenues less than 500,000. Just basic documentation, bank statements, a guarantee from the owner, as well as business and owner tax returns. Next slide. So one of the other components to this program that we're excited about is that we partnered with a minority woman-owned Fintech provider, which will provide access with an online portal for the applications, and also help us to decision the applicants much faster than we traditionally could. So the applications will be taken in electronically, and then the supporting documentation can be uploaded. And we are working to continue to streamline our overall process for these microloans. Next slide. So the other program that we have is the SBA 504 loan, as well as the SBA 7A. And we also participate in the export financing as well. For the 504 loan, if you're looking to purchase real estate, you only need 10% down, terms as long as 25 years, out to $10 million. And then with the SBA 7A loan, you can get loans up to $5 million for real estate, for business acquisition, equipment purchases, as well as working capital. And the borrower requirement is 10%. Next slide. So now we're going to go into access to capital. You can go to the next slide. And just going to provide a few tips in terms of how you can improve your application with Carver, but not even just Carver, also just in general, if you're applying to any other banking institutions or providing financials for any other opportunities. So the three main areas is understanding your business financial health, and understanding the financial needs and use of funds. Next slide. So understanding your business. One of the more important ways you can understand your business is through a business plan. Some people may have an executive summary. Some may have a growth plan, but it's really important to have a story to know your product, your service, some of the drivers, who your clients are, your competition, the market itself. And it's really important because it helps you with some of your short-term planning, as well as some of your long-term planning. It helps you to manage your finances and your operations. It serves as a great marketing and promotion document. And it answers a few questions. Who is your client? How does your service or your product fill that need? How are you going to reach those customers? Where are you going to get the financial resources to start your business, to operate your business, to grow your business? So these are some of the questions that get answered. And with a growth plan, you're identifying new markets. You're identifying new resources that will be necessary for you to be able to grow your business and enter into some of those new markets. If you're looking to pivot and you're looking to do different lines of business, these are areas that you want to be able to address with a business plan, an executive summary. I've even seen some that were one page, but it's really helpful when you are looking to get financing to be able to have something that the lender can actually take a look at. Next slide. So these are a few other tools for the financial statements that you really need to have: your profit and loss statement, or better known as the income statement, your balance sheet, and your cash flow statement. And I'll go into a little bit more about each one. Next slide. So what does a lender want to know in terms of a P&L statement? They want to know, is the company growing? What's your sales growth rate? Is it stable? Is it declining? These are some areas that the lender is going to take a look at. They want to take a look at, is your revenue stream diversified? Is it predominantly one client? So those are some of the things that the lender is going to look into. How are you controlling your margins and your expenses, your cost of goods sold, your direct cost, your labor? And we know in this market right now, with high interest rates, with inflation, we know that labor cost is pretty high. We know that some of the material costs has increased significantly. So these are some of the areas that you want to take a look at, and a lender is going to want to see what those margins look like. And then at the bottom is just your overhead expenses, your discretionary expenses. Is that stable? Is that falling? Is it growing? These are some of the areas that the lender is going to take a look at. Next slide. So with the balance sheet, is the company collecting? So if you book a sale and your terms are net 30, are you able to collect on that receivable in the time that you have in your policy? And if you're not, then it could be a challenge for your overall cash flow, so that you could have cash available to pay for any of your bills or to invest in the business. Does the company pay its bills? Are you paying on time? Are you paying any fees or penalties because you're paying late? These are some of the things that lenders are going to take a look at. How is the company managing its assets, its cash, its equipment, its facilities? And does the company have a profitable operating history? So if you're making profits, then you'll be able to retain earnings, and you'll see that in the balance sheet. So these are some of the things that the lender is going to look for in the balance sheet. Next slide. So the cash flow analysis is really important as well. Do you have enough cash receipts to cover the payments each month? So, cash is extremely important. I've heard it explained that cash is like the oxygen for your business. So how long does it take you to turn that sale into cash, and then that cash to cover expenses? And we know that certain months you may have more cash coming in, and there's certain months where your expenses may be higher. And so it's very important to manage those cash flows. And then if you are going to have a cash shortfall, just know what the timing of and how you're going to address that shortfall. Also, the loan repayments, is that being covered each month? So these are some of the areas, and it's one of the most important areas is how you're managing your cash flow. And if you can identify what the need is and how you're going to address that need with resources. Next slide. So understanding your financial needs and use of funds is really important. So for example, if you are buying, equipment or a building, a facility, that is going to be for long-term growth, but you have to use your cash now, and over time you'll get that cash back. In terms of working capital, such as inventory, you're funding your inventory, or you're funding your accounts receivables. That's your working capital. That's what you need to make a profit. And so it's important to understand what the use of cash is for. And then also you have your obligations, your bills, your debt service, and that's just basically your day-to-day operations and just survival of your business. Next slide. So here is a capacity checklist. So this is what lenders are focusing in on, just to make sure that the business has what they need to be able to cover the debt service for a loan. So do you have enough cash flow for the debt service? That's extremely important. If you don't have enough cash flow to cover the debt, then it just means that you may have to look at some other alternatives, such as receivables financing, or, some other asset-based types of financing. What's your financial management policies? So are you monitoring and managing your costs, your expenses? Do you have strong financial controls? These are some of the things that you will want to make sure you have in place. What's your process for budgeting and projections? Are you relatively conservative with your projections? One of the things that, I always advise my clients is, whenever you're doing projections, you want to be conservative with your revenue, and you want to be a little bit more aggressive with or liberal with your expenses, because a lot of times there may be expenses that you didn't actually, foresee. And on the revenue side, for whatever reason, maybe the revenue projections are much lower than what you expected. So it's good to take more of a conservative approach when it comes to budgeting and projections. Do you have can you go back real quick? Do you have financially sustainable business lines? How is your revenue diversified? We talked about that earlier. So if you have 30 to 50% of your revenue coming from one client or one source, that's a risk. So you want to just make sure you're aware of that, and you address that, and you can speak to it. How is your staffing? Do you understand what the overall business risk is for your industry? Are you looking at and paying attention to some of the drivers? We know that in this environment, supply chain risk have been a major issue with small businesses. We know that inflation is a challenge. So these are some of the areas that you want to just make sure you can speak to, and these are some of the things that the lenders are actually going to ask about. Next slide. So here is a checklist with, go back.
Yeah, I'm just going small screen just to see
there
how
we
we're
go.
doing with time. So
sure.
yeah.
Yep.
Okay.
So yeah, so we just have a few more.
Awesome.
So this is just a checklist for the loan application process. And so you want to, as we talked about earlier, you want to have your business plan. If you don't have, I've seen business plans as large as 20 pages. I've seen some that were 1 page. But it's good to just have something. It could be an executive summary. It could be a growth plan. That's something that's really important when you're applying for SBA loan or microloan. Completed loan application. Sometimes my clients may miss an area that is really important to moving the loan application forward. Maybe they missed it because they were working through it relatively quickly, or maybe they just didn't understand the question. But you want to make sure if you have any challenges or issues with the application, you have those addressed as quickly as possible, and you answer those questions and submit a completed loan application. And then the business tax returns, as well as the personal tax returns, at least 2 years. Just have that readily available, as well as the interim financial statements as well. A current copy of your lease. Now, sometimes you can get a credit report. A lot of times lenders will run that for you. But understanding and knowing your credit, whether it's a business credit or personal, is really important as well. And then also the corporate documents and insurance certificates. So overall, it's just important to have all those things ready and be prepared. Next slide. So last but not least, when seeking a loan, just be prepared. I think that's one of the most important things. You want to just be prepared with all of your documentation. You want to have your business plan and your projections. You want to also tell your story. You want to be able to talk about why you're doing what you're doing, what the drivers are, why you're looking to go into this specific market, and how you're going to get there. All those things are really important. Your corporate documents, your financials, all of those things are really important. And as I mentioned before, know your revenues and your cross drivers. And what I mean is, if your revenue dropped or increased by a certain amount, just be able to talk through what actually led to that increase or that decline in your revenue. And then just be prepared to answer the following questions about: how much money will you need, why you need it, what you're going to use it for, how long do you need it, what's the type of repayment structure that you're going to require. Do you really need a line of credit, or are you looking for a term loan? Typically with a line of credit, it's good to have that because you can actually maybe finance your working capital needs. You can finance accounts receivables. With a term loan, typically you may want to finance equipment, or you may want to finance more of a long-term purchase. And then what other resources or assets do you have that could go towards this project? That's important. And do you have collateral? Some people do, some people don't, but it's good to know if you have it or not. And so I just want to reiterate, just being prepared, it makes the process go a lot smoother, and just knowing your story and being prepared to go through some of these questions will really go a long way, not just with Carver, but also with other lenders that have banking finance programs for you to be able to take advantage of. So I will end there and turn it back over to you, Josh.
Awesome. Thank you, Lloyd. That's awesome. This is really getting in there. And so if anybody's gone through this process before, I'm sure you're extremely thankful that there was so much great insight there. Thank you, Lloyd.